What's up, everybody? My name is Jason, and welcome to your Small Biz News Report. Stock jumps 63%, and the Wall Street Journal screws ENDP shareholders. Please do me a huge favor. Give this video a thumbs up, hashtag small biz with your comments below. And as I said yesterday, make sure you join us at trysmallbiz.com. That's trysmallbiz.com, where as we speak, we only have 255 premium memberships left before we cut it off at 500. So again, it's trysmallbiz.com. And if you've already joined us as a member, all you got to do is hit the red upgrade to premium button to get in the game. So ladies and gentlemen, do yourself a favor, pull up a chair, grab a cup of coffee, ice cold beer, glass of wine. Here we go. All right, I was going to do a video on something else, and then as you've seen on Twitter, something's just blown up that I think is an excellent, awesome, teachable moment. But one more time, I'm not joking as some of you think I am, or I'm desperate as one a-hole said on YouTube. Oh, you couldn't sell premium memberships. That's why you cut it down to 1,000. No. I want 500 people at trysmallbiz.com paying me $1 a day. And I want 500 more on the other stock texting service, which is going to launch within the next month, paying me maybe about the same. But my goal, as I said, is to keep it free for the balance of this year on the stock texting service side. But in order for that to happen, ladies and gentlemen, I do need your support at trysmallbiz.com. So if you got a side hustle or a small business, get yourself in the game. You're going to regret it if you don't, because a newsletter's going out to 2,000 people in the next few days, and then I have 53,000 connections that have never heard about trysmallbiz.com. So get one of only 255 premium memberships that remain. All right, HOTH jumped 63% this morning. I put it out everywhere. Facebook, LinkedIn, Twitter, YouTube, on the community wall. Sell it at 65%, at 65 cents. Why? Because I was in Hoth with many of you for the last 4 months plus. We were down over 40%. Then they had a positive article regarding an Alzheimer's drug that they're currently involved with, and boom, the stock takes off. It was up 63% like that. I said, get out. Get out now at 64. Oh, I'm going to hang on. I think it's going higher. You've got the EVFM sickness, right? I did get out of that early. It did go much higher, but this one may not. Where is it right now? 44 cents. Almost a complete round trip. So we were down 42%. We got out with a 9% profit. That's 26 wins and 2 losses for 766% net returns since March the 1st. Fact. All of that is on Twitter at trysmallbiz. But in the last several minutes, and this is the focus of today's video, it's very important that you pay attention because you're going to learn something whether you're new or not. ENDP. We made over 30% profit in this stock a few weeks ago. We bought it at 52 cents. We sold it at 68 cents. That was a 31% profit. It came back down. So I said, it's time to buy it again. And I had an average, as many of you did, of about 49 cents. And it was doing just fine, trading with IWM and the QQQs. A lot of this are bots or algorithms, 2/3 of all the volume these days. It was trading in conjunction with the market. And then the Wall Street Journal, total slime bags that they are, they come out with an old headline that they may go into a bankruptcy reorg at ENDP. And by the way, they're based out of Dublin, Ireland. They've been around for over 100 years. The stock is down from 7 and change. We're buying it, or you could buy it right now at 38 cents. The low today was 37. So they've been around for 100 years. They have $1.6 billion in cash. They have about $8 billion in debt, and that's why it's down under $1, down from 7. But it bumped up big time on the Roe v. Wade, along with other women's healthcare stocks a couple weeks ago. And that's how we made money. But then it bumped up again when they settled, or they actually won, a major opioid lawsuit, which has been holding the stock down for years. And they've since removed 75% of their opioid risk in the stock. But it came back down with the rest of the market. I told you we're in for a correction, and that's exactly what happened. It's not major. It's probably at or near the lows, in my opinion. ARC got down to 42 and change, held at 50-day moving average, and bounced back up. So we'll have to see. If you get over 47 on ARC, we're off to the races, 55 to 60 by the end of the year. But back to ENDP. So you've got 100 years of history. You've got 1.6 billion in cash, 8 billion in debt. So that needs to be fixed. So I'll put an article pinned in the top from 2.5 weeks ago. And it's a large group of investors that over $20 billion under management. And they said a bankruptcy is not necessary. They own a ton of the common stock, by the way, at $2, $3, $5 and change. We own it in the 40 some odd cent range. You can buy it right now at 0.381. It's almost a half an hour thereabouts to the close of the market. But they own it a ton higher. They own the bonds. They own some of the preferred stock. And they talk in this article that you've got more than enough cash to avoid a bankruptcy. They're willing to do a tender offer. They're willing to do a buyout. They're willing to do a reorg of all the debt. Why? Because they got billions invested in the stock and the bonds at much higher prices. They don't want to see the damn stock in simple terms go to zero. But may I remind everyone, it don't put any more than 10% ever, if you're a beginner especially, into one idea. If this blows up and I'm wrong, it's not going to destroy you if you have a 5 to 10% position of your total portfolio. But if I'm right, along with the major bondholders that are saying a bankruptcy is not necessary, and we lean on other examples like Hertz, which on the pink sheet stocks bulletin board last year went up over 400% in the middle of the bankruptcy. Or the best example recently is Revlon, REV. It was $1.25 about a month ago. They officially announced they're going into a bankruptcy reorg, and the stock went from 125 to over 8. It's currently 5.5. Now, I'm not saying ENDP is going to go up 5 or 6-fold, but it might. So what's the downside? Back to where it was a couple months ago, a quarter. If I'm wrong and they have some sort of a problem that all these other groups don't want to see, yeah, you're going to lose 20 to 30% on your money. But what does that really mean? That means we give back the profit we already made. So we made 31%. We may risk giving it back if I'm wrong. But if I'm right, and buying it right now at 38 cents and change, I wish I could buy more, but I'm out of cash because I'm all in, and I've got 20% of my portfolio in ARKK at $36.79. Am I tempted to sell some of it to buy some? Yeah, but I'm not going to. My average on ENDP is 49 cents. If you can get in for the first time or buy a little bit more at 38.383 as I'm talking to you right now, I think it's a great risk reward, but there's no guarantees. It could drop to a quarter-ish if we're wrong. But if things settle down and we get another bounce, whether it's on women's healthcare stocks going back into vogue, or another reiteration from the company that, hey, we just settled our opioid risk, or at least 75% of it. And as some of the bondholders have said, yeah, we don't need to go bankrupt anytime soon. So until next time, ladies and gentlemen, I hope some of you stuck around to the end. You'll know what's going through this mind at all times. It's all about risk reward. And until next time, always remember that I love you, and I hope to see you as one of 254. One just signed up as the lights go out. One of only 254 premium memberships that remain at trysmallbiz.com.